What if I told you there's a real estate strategy almost nobody's talking about, yet it's creating more millionaires right now than anything I've ever seen? Most investors are stuck fighting over overpriced single family homes, frustrated that the numbers they just don't work anymore. But while they're busy chasing deals that can't cash flow, there's a small group of investors out there that are quietly building wealth with returns in the yes, 30 to 40% plus range. And the crazy part, this opportunity has been actually hiding in plain sight, especially in my area in Louisiana, the entire time. And in this video, I'm going to show you why single family homes have actually become nearly impossible to cash flow in 2025, the hidden strategy that's actually outperforming everything else, how powerful tax advantages make this play even stronger, and why I'd choose this exact path if I had to start all over with today. So, if you're ready to learn the strategy that could completely change your financial future, let's dive in. And let's start off before we get into the hidden strategy. Let's actually talk about what's actually going on right now in the real estate market. All right, this is 2025. Now, if you've been paying any attention, you know that traditional single family homes they have basically priced themselves out, literally untouchable for investors. The median home price is actually jumped another 7% just this past year. Combine that with today's interest rates and the math, it flat out doesn't work in most markets. Now, I was talking to a friend recently, and he's actually been in the single family rental game many, many years. He actually looked at a property out in the Midwest just last week. And 3 years ago, he told me, Jeff, it would have been a slam dunk. Back then, it would have cash flowed nicely and made perfect sense. But when he actually ran the numbers now, he actually laughed out loud because the deal was that bad. And that's the reality for most investors today. They're all competing for the same tired inventory out there. They're fighting over scraps, and the returns aren't good. Cap rates in traditional real estate right now are in about the 4 to 5% range, if you're lucky. But here's where things are starting to get interesting. While everybody else is stuck complaining about how hard it is to find a deal, there's been a massive shift happening in the background. Economic pressures like stubborn inflation, high financing costs, and changing demographics are actually creating a perfect storm of opportunity in asset classes that most people, probably you, overlook. And the best part, the cash flow. The cash flow in these alternative spaces is absolutely blowing traditional rentals out of the water. I'm talking 10, 11, 12, 13 plus cap rates in some cases, more than double what you'll find with single family homes or apartment. So what exactly, Jeff, is this hidden strategy? Well, it's actually something that I'm not out here talking about something that you could invest in I don't know about. This is actually something that I've been currently doing for several years, and it's actually pretty simple because I live in Louisiana, but you don't have to live in Louisiana. It's investing in RV parks and mobile home parks. Now, before you click away thinking, Jeff, that's not for me, hear me out, because this is absolutely not what you think. These aren't the typical trailer parks from the 1970s. The modern mobile home park and RV parks, some even are RV resorts industry, has actually undergone a complete transformation, especially post-pandemic, with people wanting to work remotely. It's actually becoming permanent for actually millions of Americans. We're seeing a massive migration towards affordable, flexible living arrangements with amenities that a lot of times traditional housing that can't even match at the same price point. The key to finding these undervalued properties is just actually going out and looking in secondary and the tertiary markets that are typically within about a 2-hour drive of major metropolitan areas. These are places where land is still relatively affordable, but they're close enough to urban centers that people can actually commute when they need to. Now, before I tell you what I'm personally doing, did you know that over 92% of the people that watch these videos, just like you're watching right now, are not subscribed to my channel. Now, if you fall into that category and you're actually getting value from this video, please do me a favor and simply hit that subscribe button below. Thank you. Now, let's get back into it. All right, so let me talk about what I'm personally doing right now. What I'm personally doing now is actually targeting parks that are mom and pop, owner operated, poorly managed, and they actually have below market rents. Typically, these owners are 60, 65 years or older. They're ready to retire and they have no idea, which is a good thing for you, no idea how to market their properties effectively, especially in the digital age. Now, when I'm looking at these deals and I'm analyzing these deals in the current economic climate, here's what I look for. Number one, parks with at least 50 pads or spaces. Number two, the current occupancy is anywhere from 70 to 85%. So that means you're going to have some room for improvement. Also, you're going to have utilities which are separately metered, which means that tenants pay on their own. You, the park owner, do not. We look for below market rents, at least 15 to 20%, and minimal deferred maintenance. Just last month, we closed on my business partner and I, we closed on a 53 lot mobile home park about 7 to 10 minutes from my house. The previous owner was charging anywhere from $150 to $175 a month for lot rent, when all the comparable parks in the area, they're getting $250 to $275 a month. How do I know this? It's because we own most of them. But even if we didn't, we could just simply call around and ask. Within 30 days of taking over this park and, making some basic improvements to the common areas, we've already raised the rents to what they should be, $275 a month. Now, you'd think if you would go up over $100 a month in lot rent, there'd be a mass exodus out there. But only 4 people moved out, and all but now one home is available to move in. Supply and demand. Now let's talk about why this strategy is even more powerful when you understand the taxes, the tax strategies. So this is where it gets really interesting, especially now that Trump's big, beautiful tax bill has just passed. The game changer here is that 100% bonus depreciation is now made permanent. This is absolutely massive for real estate investors, particularly those in alternative asset classes like I'm in, RV parks and mobile home parks. Here's what this means. When you buy one of these properties, you can then do what's called a cost segregation study. What is this? Well, this actually breaks down your property into different components. Segregation study, okay? Different components. Well, what are those? Well, instead of just looking at it, the park as a whole, now you're breaking things out like the roads, the electrical infrastructure, the parking pads, water system, maybe it has a clubhouse, anything like that. So instead of depreciating everything as a whole over 27 and a half years, you can now write off all of these what's called short-lived components in year one most of the time. So for instance, on a $1 million park, this can mean writing off anywhere from $300,000 to $400,000 immediately. All right, immediately. So if you're somebody that's in the 37% tax bracket, that's over $100,000 of tax savings right away. This is money that actually stays in your pocket instead of giving it to Uncle Sam. What makes mobile home parks and RV parks particularly powerful for this strategy is that a much higher percentage of your investment is in these depreciable components compared to traditional real estate. So let's say a typical apartment building, maybe 20, 25% of the value is in these short-lived assets. But in RV parks and mobile home parks, it can be 35, 45% or more because so much of what you're buying is the infrastructure. Now, look, I'm not a tax professional, so just a lowly dentist, okay? So definitely consult with your tax professional because this new permanent bonus depreciation just makes this opportunity that much more powerful. Now, if you don't have the capital to go out and buy a whole park yourself, you can still access these tax benefits through how I invest through real estate syndications. This is where you pool your money with other investors to buy large properties. That's simply what it is. It's a partnership. Now, when you do this as a passive investor, you'll receive what's called a Schedule K1 form. This actually shows your share of these paper losses. Remember, we talked about the cost segregation study, depreciation, you get these losses. The IRS allows you to write off the wear and tear of these properties. So the K1 that you'll get each year will show these paper losses, which can offset other passive income. And in some cases, even your regular income if you qualify as a real estate professional. All right, now let me break down why these two specific asset classes, RV parks and mobile home parks, are absolutely crushing it right now compared to traditional real estate. First, let's talk about RV parks. The RV park industry has actually exploded during the pandemic, and contrary to what many predicted, it really hasn't slowed down that much. In fact, a record number of Americans purchased RVs in the past 24 months, and the demographics actually shifting to younger people. The average new RV owner is now around 33 years of age, down from 47 years of age just 5 years ago. Now, these aren't just vacation properties anymore that you may think about. With remote work, many people are living in high-end RVs full time, traveling the country while maintaining their careers. They're looking for parks with amenities like high-speed internet. They want modern clubhouses that typically have co-working spaces. And they certainly want to work out and stay in shape. So they want fitness centers, and they want to have some source of community. So they want to have community events. Now, when you provide these amenities, you can easily command anywhere from $800 on the low end to $1,200 a month for a premium RV spot with virtually none of the maintenance headaches of traditional rental properties. The tenant, they own their own dwelling. They pull in with they're either driving their camper or they're pulling it behind their truck. So all you're doing is you're simply providing the land and the utilities. Now let's move to mobile home parks. This is where the real wealth is being created. Warren Buffett has actually been investing in this space for years through Clayton Homes, and for good reason. The economics are absolutely incredible. The average tenant stays around 7 or more years compared to 1 to 2 years with an apartment. Number two, the eviction rates there are extremely low. People don't want to pay the money, anywhere from $3,000 to $5,000 a month, to hire somebody to come in, disconnect their home, move it to a new park, and then have to connect it and set it up again. They don't want to do that. So that's why, one of the reasons why the eviction rates are so low. And then typically from what we're finding from currently owning 11 mobile homes parks are the operating expenses. If you do it right, they're going to range from anywhere from 30 to 40% of the revenue, compared to typically 50 to 60% when you look at the typical multifamily or apartment complex. Now, what's driving this opportunity is the severe shortage of affordable housing nationwide. The average mobile home lot rent in most markets is anywhere from $350 to $500 a month, making it by far the most affordable, non-subsidized housing option in America. And here's the thing that you really have to think about. Just like Bitcoin, they're not building any more new mobile home parks anymore. Why? Zoning restrictions. They've made it nearly impossible to somebody to go out on a piece of land and develop just new parks in most areas. This means that existing parks that are operating now have an incredible moat around their business, limited competition, and growing demand. Got it? So let's wrap this up. The hidden real estate strategy that's creating millions of millionaires right now is investing in RV parks and mobile home parks in secondary and tertiary markets. Remember, these investments offer higher cash flow than your typical single family home, incredible tax advantages, less competition from institutional investors, lower maintenance and management headaches, which is what I like, and built-in protection from somebody coming in and just building right on top of you. Now, if you're interested in exploring this strategy, here's what I recommend next. First, start researching parks within a 2-hour drive of where you live. You can find listings on websites like mobilehomeparkstore.com, rvparkstore.com, and even LoopNet. Second, join some of the free online communities focused specifically on these asset classes. There's several Facebook groups out there with thousands of investors. They're talking what they're doing, they're sharing deals, they're sharing strategies, advice. It's all for free. And then third, what I did, consider partnering on your first deal. Now, again, that's what I started off doing, and that's what I've continued to do now. Because these properties that I'm typically purchasing, they're anywhere from the $1 to $3 million range, which might be more than you want to invest on your own initially. So finding partners can actually help you get into bigger, better deals while actually spreading out the risk. This strategy, I understand, isn't going to be for everybody. But again, that's actually a good thing. The less competition, the better for those of us who recognize this opportunity. But I can tell you that in my 10 plus years of real estate investing, I've really never seen a more asymmetric opportunity quite like this. Now remember, just like investing in the stock market, real estate comes with risk. And somebody tells you that it's not, run, because there's no such thing as risk-free investing. Make sure you understand what you're getting into before you get started. Now, earlier in this video, I mentioned investing passively in real estate syndications. If you want to find out more about how they work, good news, you can check out this video.